In this video, we'll be using Binance grid trading bots. I'm going to go through using the spot and futures grid trading bots, exactly how they work, what type of trading they're good for, some of the pros and cons and risks of using them as well. I'll leave timestamps for everything down in the description. Let's come right to our Binance trading system then. Trading bots, it takes you through to this page. If you don't have a Binance account yet, I'll leave the link to sign up below. They might give you a deposit and trading bonus. You can check the details via that link though. If you're looking for an explanation of the other types of bots, I'll leave that video down in the description. I'll leave a beginner's guide down there as well. If you don't know how to use Binance, you can check that video. Firstly though, we're going to look at spot grid trading bots. So click this one, go through to that page, and you'll see that you go through to the trading system. On the right hand side is really where we can change all of the parameters of the bots and how they actually work, including auto. So you can just let the Binance system give you, all of the parameters. You can sort everything manually, and then you can look at popular bots as well. One thing with popular bots, I would say, they've obviously performed well over a time period, right? So maybe 2 to 7 days or something like that. That's great for them, but that's not necessarily indicative of performance over the time that you have the bot, right? So we can have a look at these and how they're working, but really it's about really understanding what you think the price of something is going to do over the time that you have the bot, and then taking advantage of that. So I'll explain that in this video. Firstly, what we want to do though is actually explain how these bots work under the surface. So I'll quickly show you how these bots actually work under the surface and how they try and make some profits. If you know how grid bots work, you can just skip through to the next timestamp. How do they actually work? Essentially, you give them an upper and lower bound where the grid bots are going to trade for you, right? So that can be any different price for any different asset. But if we have an asset and we want to trade within a range of 96 to 100, so we have a lower bound and we have an upper bound. Within this price range, the grid bot is going to buy and sell with your instructions. So the first thing is we have a price range, upper and lower bound. The second thing is we have a number of grids within that price range. A grid is the difference between a buy and a sell. That would be known as a grid. So the price is 98. You buy here, the price moves up, you sell here. That's one grid. Buy low, sell high. There's your grid. How many of those grids do you want, and where are the price levels? That's what we have to set. With a grid bot, if the price then moves back down to this level, the grid bot is going to refresh the buy order at that level. If the price then moves down to the next level, it's going to buy here. And if it moves down to the next level, it's going to buy here. The upper bound has been, or the lower bound has been breached at this point. Under here, there's no trading. Now, if you've bought the crypto here, which we have, you still own that crypto, but the bot is not going to trade or produce any grids below the level, because that's the level we set at 96. As the price moves back up, it's going to sell here, and then it's going to sell here. And then if the price moves back down again, it's going to refresh that buy offer and so on. So within this grid, within the upper and lower bound, it is going to buy and sell and refresh all of those bids and offers. It's going to refresh all of the buyers and the sales over and over and over again within this price range, trying to take out small profits out into your portfolio. And so that is how a grid bot actually works under the surface. Specifically with spot grid trading, which we're talking about now, we'll get onto futures in a second, but with spot trading, you have to buy first and take long positions in order to sell higher, right? So you need to use cash to buy something and then sell it when it goes higher. And of course you trade within these grids. But if the price, let's say we're starting a grid bot with the upper and lower level, right? You can see these yellow lines here. And let's say the price moves down, and so we're buying at these lower levels. If the price breaks our lower bound, we're still owning that crypto. So we're not selling any of that crypto because the price hasn't come up to levels where we'd want to sell it. Down here, the price is below our bound. We own crypto at higher prices. And so you're going to be making a loss on that crypto. So there's risk here, just like trading in any market where you're taking a long position, you're buying the underlying asset. We'll just look at Bitcoin here. Price moves down, you're going to be in a loss. Unless the price moves back up again, and then you start selling at those increments as well within this range. Now, also with a grid bot, you may actually buy some cryptos, have some cryptos, sell bits of it but not other bits. And so if the price moves above this range, you may actually have some crypto left over as well, and that's going to be in profit. So the grid bot isn't trying to buy and sell and get in and out of all of your crypto within the range. You have the crypto here, but it's also trading amounts of it as well within that range. And I'll explain that throughout this video. But if the price moves up, you may still have some crypto that you've actually got to actually take profits in and will be appreciating as well. So I want to explain that through this video. But the grid bot is buy, sell within this range. You may still have some here that you've bought, and you may still have some here that you have as well that you can actually sell at a later date. And so what are these bots good for? Before actually putting in the parameters, what are these bots good for in my experience? I've been running bots for a while now, specifically for this channel, just to show you real data. Now, what I think bots are good for, spot grid trading bots, are for a sideways ranging market, or maybe a market where you think the price is going to move down and then back up within this range. The reason I say that is I've had these bots running on a different platform, which is Binance. I'll link the video down in the description if you want to see all of the data. But essentially, I started the bots about halfway through a bear market. Now I'm in a loss, or I was in a loss when I made this video, which I'll link below. You can see the Bitcoin and Ethereum bots were actually down, so the positions were losing money versus my initial investment. However, versus a buy and hold strategy, they were actually outperforming that. The reason is because in that video, I bought or started the bots around this level. And what has happened is that the bots have had an opportunity to buy crypto at lower levels. So if I'd have just bought all of my crypto here at around 30K, then I would be in a loss on that. And down here, I would have been in a much bigger loss because I just put all my money in at 30K. What the bots have done is enabled me to trade at lower prices and get some crypto at lower prices, which has then appreciated as the recovery happened. And also it's making profits from those grids as well. So I think spot trading grid bots specifically are good for when you think a price is going to move within a certain range, up and down, taking advantage of the volatility, trying to buy lower than just buying and holding within that range. That's how I think they work best. Within a range, you want volatility within that range, buy lower, sell some, take some volatility out, and it's going to outperform buy and hold if you bought at higher prices. Now, if the price just goes here, let's say you start a grid bot here and the price just moons upwards in a straight line, buy and hold is probably going to be outperforming there because you would have just bought the most amount at the lowest price, which was here, instead of trying to muck around with the grid bot. So I think kind of sideways action or weak to sideways action is probably the best way for these bots, because with a spot trading grid bot, you're looking to buy first and then appreciate up, and you make the most money when you're getting the most at a cheapest price. So grid bots can help you actually dollar cost average a bit lower whilst also taking some profits out from that volatility. How do we specifically go ahead and use the bots then? I'll show you auto features first. It gives you an idea, and then we'll go through the manual settings. Parameters are important. The first one is the time period. Now this is on auto. You don't choose this for manual, but we can see that auto changes the price range for us. So if we see the 3-day right here, if you want a bot open for 3 days, it's not a lot of time. The price normally is not going to move a lot during a 3-day period, right? It can much more easily move a lot over a year than it can 3 days, barring any news or some unknown events. And so you can see the price range here. The current price of Bitcoin is 26,600. It wants me to trade within 24,700 on the low side, 28,500 on the upside. The reason is, if you think the bot, it has to reserve your cash to trade at different levels. And so what you really want is the most amount of cash trading in the most concentrated range, because you want to put the most amount of money into each trade. The perfect scenario would be if it moved between 26,500 and 27,000, and it just went in a straight line up and down the whole time. That would be perfect, and you put all of your money in it into each trade. That's almost impossible. And so what we want to do is try and figure out within the time frame that I want, what is the range that I think it's going to trade in, and try and concentrate money within that range. If you have a really wide range, you're going to be trading smaller amounts, and so very much harder. So you can see over 3 days it has a smaller range. If we go to 180 days, it has a bigger range, because within that time frame it's going to more likely move that amount, and you want to be taking advantage of it. Remember, if it moves out the range, you're not going to be trading. And so you're not going to be buying and selling and taking those small profits out, hopefully small profits out, right? So just, make sure you know how long you want to trade before getting into it. Number of grids is also important. This is the amount that you're going to make per grid. So if you have a price range of 25 to 30 and you have one grid, then you're not going to trade until the price hits 25 and until the price hits 30. Now that's fine. You make $5,000, per BTC, however much you're trading, but you're going to be waiting a long time to trade, right? It's basically like buying and holding at that point. With the number of grids, the more grids that you have, you trade more actively. However, of course, the more grids you have, the less percentage profit you make per grid. This is just really a good balance, right? You want a good balance between actively trading, not trading too much, which is just a waste of time. Again, the auto parameters are going to know exactly what the normal volatility of the asset is that you're trading. And so maybe over 7 days, it knows within 7 days, it's probably going to move around these prices based on the volatility that it's had over the past few weeks. And then with that volatility, it's actually better to trade 37 grids. That would be a good balance. 50 would be too much, 20 would be too few. So again, that you can actually copy that into the manual parameters if you want. Now you can just choose the amount that you want to invest in the bot, and it's going to spread that money over the bot and make sure that it trades for you. So you can do that with auto. We're going to go to manual though, just to see this. So again, we can clear all, we can auto fill just to give us an idea. So again, this is a fairly small range, so it thinks we're trading short term, but you can have these bots open for as long as you want. The amount of grids is 48. It's going to work that out. So what I'm going to do here is maybe 20,000 to 30,000. Right, so I think the price is going to move down a lot lower, maybe to 20, and 30 would be probably where it would meet resistance, right? So you have to choose that. So look at your analysis and say, during this 3-month period or 1 year period, where do I think the price is going to go? Now, how many grids do you want? You can choose between arithmetic or geometric. Arithmetic is each grid is a dollar amount apart. So let's say I want 50 grids. It's going to know that each grid is, X dollars away from the other one. And so depending on the price, that amount of dollars is a different percentage of that price. So it's going to be around 0.5%, let's say 50 basis points is the amount that you're going to make per grid. So it's going to buy and then it's going to sell around 0.5% above that. And that would be a grid that you take. So each grid's that. The more grids that you have, the profit per grid goes down. So 100 grids, you'd make less percentage per grid because there's more grids. So more active buying and selling, smaller profits per grid. Again, I would just have an amount where you feel comfortable, or look at the auto, see the percentages it thinks, and then relate that to your range. With the investment here, you can just choose an amount, investment that you want to put into that. Now, like I said, with a larger range, if you have a small amount of capital to put in, the capital is going to be spread out very thinly. And so it's always best to have the tightest range possible that you think. That's difficult because you just don't know where that price is going to go. But you can look at previous volatility or just use the auto feature to give yourself an idea. Now down here, there's a few things you want to know. The grid trigger. This is telling the bot when to start. So the price right now is 26,649. What's it going to do at this level? It's going to buy at 26,649. You can see the green box here. Because in order to sell some, you need to buy some first, because this is a spot grid. So you need to own Bitcoin first in order to sell it for a profit. So it's going to buy straight away. You can also trigger it to say, I don't want to start here. I want to start at 25,000. So 25,000. And that would be at this level here, a little bit below. That just is a trigger. You can put it in or not. It's up to you, right? So again, I not really would use the trigger. As long as it's within my range, I'm happy to keep buying and selling if I can, right? Now the stop trigger here, like I said, if the price moves down to our bottom range and then below it, you're going to be owning a lot of crypto because you would have been buying at these levels probably, right, and holding it. And then you wouldn't have had an opportunity to sell it moving upwards. And so if we're down here, we're going to be in a loss. What you can say is, here is my stop loss price. So let's say, as an example, I had 16,000 as my lower bound. I could say 15,000 is a stop loss where if you've got any Bitcoin left that is in the bot, sell it now. And you'll be making a loss on that But that's a stop loss, right? You're making a small loss and you get out of the bot because you are going long Bitcoin at this price, or the other crypto that you're trading. Take profit again. If you have any crypto left in the bot that's working for you, which you may have, maybe you have some profits, because if you are taking a profit, you would have been buying and selling some. Maybe you have some left in the bot from profits that you had. You can take profit there where you say, 32,000. That is an amount where if there is anything left in the bot, it's going to sell out and actually close the bot for you. These are stop triggers. So that means you're going to be closing the bot at that point. If you don't choose these, just toggle them off, what's going to happen is the bot's just going to keep working. And if the price does come back down into the range, it's going to start trading again for you. Now we'll move on to the futures trading bots, which do have extra features over and above the spot trading. So futures grids right here. Click that, you should go through to this page, which looks very similar, but now you are trading in the futures market. The difference here is that with spot trading, you buy and hold crypto. So you can really only take advantage of the price coming down, buying at cheaper prices, then waiting for the price to move up to sell. And then you're looking really at some point to sell at a higher price. With futures, you are not buying and holding cryptocurrency. You're just simply taking positions on the price. So you're trading the price differences. These are synthetic contracts. They're not crypto. You're just looking at a price, trying to predict that price, where it's going to move within that range. The benefit of futures is that you can trade long or short, meaning, yes, you can benefit from the price going up. You can also benefit more from the price coming down, because with futures, you can actually sell high first and then buy back lower later. And that's buy low, sell high, just in reverse. And so with futures, that's an advantage. It's much more for more active trading, for day trading, but there are risks with futures. The main one is that you can use leverage. Now, you don't have to use leverage with futures, but you can see this 5x right here. That is the leverage. Leverage meaning you put $1,000 into the account. I'm using 5x leverage here. I'm going to open trades worth $5,000 in the open market. Now, with the $5,000, if I lose out, or the price moves against me by 20%, 20% of $5,000 is $1,000. So your initial capital completely wiped out. That's why it's more risky, because a 20% move can wipe you out completely, versus in the spot market where you can just buy and hold the crypto and say, I'm just going to hold it, wait for the next bull market. With futures, you might get stopped out on a 20% move. So leverage is more risky. Of course, you can manage it and make sure you're using amounts that aren't, massively important and etc. I can't recommend leverage, but of course, many people do want to use that. The difference with futures is that you can go neutral, which means you're really looking for a sideways action. The bot is going to have a bias, neutral bias, right? So it's just going to say, okay, you're asking me to trade within this range. I'm going to do that. If you have a long bias, the bot is going to have a bias towards hopefully looking for the price to move up within that range and taking long positions first. So getting long first and then trying to sell. With short, you're looking for that price to move down. So really you should be, if you're going short right here, your grid parameters should probably have the upper bound pretty near the current price and the lower bound below it, because you're looking for the price to go down, right? But what it can do is on a short bias is take those short positions first and then start buying back, so that you can have the bias for the bot that way. And then the only difference is the amount of capital that you want to use in terms of the leverage. So what we can see here is that if you put in, I'll just put $50 here. If you put $50 in, that's the amount of capital you put in. And 250 is the trade size in the market. So 5 times 5x, 50 times 5x leverage is $250. So that's the trade size right here. This is the amount of money you have to fund any potential losses and to fund the trades. The main thing to look out for when using leverage and using futures is the liquidation price. And it does show you what that liquidation price would be. So if you come into the manual settings here, I think it's in auto as well, but you can see the liquidation price, estimated liquidation price. With futures, if you are making a loss and your loss gets too big, and potentially you won't have enough cash to fund that loss, the system's going to trade you out of all of your trades, sell everything out, pay off any potential losses, and that's you liquidated. Now, you can't make any bad debts on Binance, or at least you shouldn't be able to. And so what it's going to do, let's say you have a bot between 25 and 27, and the price is at 24. If you're using leverage where you're liquidated below the lower bound, that's fine. If your liquidation price is very, very near to the lower bound, then you're probably taking too much leverage and too much risk, right? You want like a a small amount of buffer between the lower bound, maybe if it moves a little bit down, and also that should be your liquidation price under that. So just check the prices of the liquidation price and your upper and lower bound. You can change the leverage here, bring it lower, and that's going to move your liquidation price further away from where you're trading. That's the most important thing to not get liquidated. As you can see with futures, there's extra risk in the trade, right? Because you're not buying and holding, you're funding a position. So that risk is just something to be really aware of before taking any positions. I'll leave the link to Binance below if you don't have an account yet. Also the other helpful videos down there too. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.